Hello, and welcome to another episode of the Markets at a Grand series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we are going to be covering just one event, and this is the release of the USDJPY data, which is the most anticipated news for the day, as well as for the entire week. So we all know that markets have been trading sideways since last week without having a proper direction. And this is an indication that markets have been consolidating in preparation for the US CPI report, which will likely cause increased volatility in major US dollar pairs. We'll also be expecting to see increased volatility in US equity indices. And of course, we will be expecting to see more volatility in gold as well as oil. So hello, Caspar. Hello, Jason. Can see Ambrose in the house. Hello, Maina, Milliam. Of course, Tony. Thank you. Thank you for joining the session. Vamos. So we have quite a number of things that are extremely important to understand before the data is released. Remember, this is happening at exactly 4:30 p.m. So let's begin with what the news is about. So today, traders focus on US inflation data, and this is what you need to know. One, the CPI inflation has been on a downtrend since topping at 9.1% in the July 2022 report. And since then, we have seen 12 consecutive drops down to 3% reported in July 2023. So what this means, according to this chart, is that the highest inflation that we saw for US last year was 9.1%. And once we hit the 9.1%, we had 12 consecutive drops. So the first month, second, third, fourth, fifth, sixth, seventh, 8, 9, 10, 11, 12. So on July this year, this is when we saw the lowest inflation in a while for US, which came in at 3.0%. So after the inflation rate got to 3.0%, you can see there is two consecutive rises that happened. This is August and September. Then from September, we had a sideways momentum. In this case, inflation remained the same. And now we are waiting for the next data point. So don't ignore the overall trend, which is bearish. But despite having these two months where inflation was on the rise and then sideways, so the expectation here is to get a direction, whether it jumps higher or it moves further downwards. So focus on the entire report and the trend rather than just one data point. So inflation started increasing following a surprise 3-month rally in crude oil. So we saw crude oil making some good rally a couple of months ago. And with crude oil prices rising, then it led to higher inflation reports in the US. Of course, we also had pressure coming from interest rates rising, which was affecting real estate. So as a result of that, we basically saw the market showing showing higher housing costs. So the 3 months I'm talking about is this month of July, then August, followed by September, where oil prices literally moved from a low of $71 all the way up to $95 per barrel. So these sudden rise in oil prices brought on increased pressure as petrol and energy costs would eventually rise in the US. And of course, it would have an impact on the CPI. But then, since hitting $95 per barrel, you can see that the overall direction has been moving downwards. So for the last 2 months, oil prices have been on the bearish side, despite making an impressive rally this week. So this week, what you're experiencing is 3 consecutive days where the market were continuously moving on the upside. And today, you can see there is a lot of consolidation. The market is literally doing nothing as it awaits the announcement of the CPI report. So here we have what looks like a loudspeaker formation on the 15 minutes chart, and nothing much can be expected unless we have a key data news basically influencing the direction of the market, and that is expected to be the CPI report. So after seeing such a strong rally and then oil prices dropping, then that drop in oil prices is expected to lead into lower CPI number. And that's what we're expecting today. So inflationary pressure cooled off somewhat in September, where it stayed at 3.7% as reported in October. So the November report expects that the annual CPI report to slow down to 3.3%, which is expected to be announced later today, and this will be at 4:30 p.m. East African time. So stronger than expected inflation may increase pressure on the Fed to keep hiking and likely lead to a strong dollar. So if you happen to see stronger than expected inflation data, let's say inflation jumps above 3.7% to let's say 3.8, then in that case, it's expected to lead to a strong dollar. So on the other hand, a weaker than expected inflation could likely lead to a lower dollar since it would be consistent with the Fed's expectations. So in this case, if inflation is weaker than expected, then investors will be betting that the Fed is not going for further rate hikes. And in that case, it would basically imply that the dollar now starts weakening, as investors will not be betting on higher interest rates, which have been driving demand for US treasuries or USTs. So another key development that we have seen is that last Friday, there were two major announcements. The first one was Moody's basically downgrading the US credit rating from AAA to AAA negative. And this is mainly because of the rising cost of servicing US debt. So the US has issued so much bonds, and those bonds have different maturities, but then the burden becomes the new yields that the US has to keep on paying, and these yields are rising and basically going to surpass the US spending on defense by next year, and this is becoming quite a big challenge. So the other key data point or market development that we saw last week on Friday was the failure by the US to sell 30-year treasury bonds. So yes, the bid to cover ratio was above 2.0, meaning that there was enough liquidity to absorb the new bonds that were issued. But then in order for the US to clear all those bonds, it had to issue higher yield on those bonds. So instead of the planned 4.6%, they had to pay 4.7%. And as a result of that, it basically shows market reluctance to buy longer term US treasuries. So for companies, hedge funds, and other investment organizations, whenever they're investing in treasuries, they have an outlook of how the economy may perform over the next 10, 20, 30 years. So when they buy those bonds, if they expect interest rates to naturally drop, then in that case, they will avoid buying those bonds. But then in an environment where they expect interest rates to continue rising or to stay high, then in that case, the appetite remains high because the yield on such bonds tend to be quite positive and profitable for them. So in this case, it's quite a challenge for the US to keep selling longer term securities. But then for short term ones, the demand is still significantly high. So if they're issuing, let's say, 3 months, 6 months treasury bills, then investors are scooping these up because it's basically taken as a risk-free return. So those are some of the key developments. And now we look at the economic calendar to see the key data points that will be released at 4:30 p.m. So first data point, remember, all of them will be released at the same time, but we'll go through the list. The first one is core inflation rate. And core inflation rate is basically the consumer price index basket without food and energy prices, which tend to be quite volatile. So it's a much smoother measure of prices across the economy. So the way you would think about this, if there's a basket of commodities that estimates, let's say, the purchasing power of the Kenya shilling, we would take the average price of, let's say, a packet of unga in the country, bar soap in the country. We would look at a packet of sugar. We would look at a unit of transport. Let's say moving or traveling from Nairobi to Nakuru, and then estimate the average price. We would also look at education, the average cost of education, the average cost of healthcare, the average electricity bill, and so on. So then we compare that over a period of time and try to understand the movements in these prices. So if the price of this basket moves higher, that's when we say there is high inflation, and then we compare the percentages. So in this case, since the inflation report is a lagging report, we are looking at what happened to the US economy in the month of October. And when we say month over month, we will be comparing October with the previous month. So during the month of October, we are expecting that the price of this basket of goods increased by 0.3%. So it was the same increase as the previous month. So previous month 0.3, and the forecast is also 0.3%. So with this in mind, we also look at other data points. Of course, we look at the core inflation year over year. So in this case, we are comparing with the same month last year. So we are expecting that this inflation slowed down to 4.0% from the previous reading of 4.1%. And this could be very significant for the Fed, especially if it was to go below 4% to, let's say, 3.9%. This would be quite an achievement for the Fed, and the Fed would down the tools that they've been using to hike interest rates. So for the overhead inflation year over year, we saw inflation rising by 3.3%, 3.7% in the previous reading, and we're expecting this to slow down to 3.3%. So the two key data points that investors will be majorly focused on is these 3.3% and these 4%. So they will be looking to see whether the 4% goes down lower or whether 3.3% goes down lower. So if these two data points are reported at exactly as they are, these will be considered as consistent with the Fed's expectations, and the overall expectation is that the dollar may likely weaken from these. But then, if the data is higher than this, let's say core inflation stays at 4.1%, and then the inflation rate rises to, let's say, 3.8%, then in that case, it would be quite unexpected for the Fed, and it would lead to the potential for a rate hike in December or even in January. So in that case, it would likely lead to a stronger dollar. So for the month increase, the previous month it was 0.4%. Now we are expecting 0.1%. And of course, for the month increase for core inflation, we expecting the same number, which was 0.3%. So we're also expecting a 0.3% increase in October. So knowing this, when we look at the charts and now try to understand where prices might be headed, you can see Brent oil is already consolidating in these two trend lines. So there'll be a potential break, which will likely lead to the direction of the breakout. Then looking at gold, we can see that this is clearly a consolidation. Nothing much is happening here. So we can say that gold has been volatile today. It's just sideways momentum. And if I was to adjust this trend line again, I would likely just use something along this area here, point out that gold has just been trading within this flag. So at some point, we'll see a breakout either to the upper side or to the lower side. And this is depending on the market reaction to the outcome of the news. But there's a good likelihood that the market will be unidirectional. And if there's a strong difference between the expected outcome and the reported outcome, then we could see new trends starting entirely from today going towards the end of the week. So if, for instance, the news comes in and it's very strong, showing potential for another rate hike and the dollar strengthens, then we could be seeing gold trading lower and perhaps driving all the way down to 1932 and perhaps even lower levels than that. Same case applies to a dollar weakness. We could be seeing gold shooting to 1953 and perhaps some further rally all the way up to 1969. So for US equity indices, they're also consolidating. So if you look at the NASDAQ, this is the NASDAQ index and how it has been trading for the last 2 days. So moving down and then up, down, up, down, up, you can see the consolidation clearly. The market doesn't have a direction. So in this case, we could be seeing the market taking a direction from the reaction of the news report later in the day. And it's the same case for the US 30 or what we call the Dow Jones. So in this case, we keep adjusting our trend lines to reflect the new reality. And it's the same thing for the S&P 500. Yes, there was an attempt to go up earlier in the day, but we knew that a majority of the momentum would come from the news. So this is the area to monitor here. The upper side versus the lower side, and then we wait for the break. So then for France index, or the French 40, CAC 40 index, trading in a triangle. And eventually we will see a strong break. And once the strong breaks happens, it will give us a direction where the market is headed. For the Euro 50, in this case, we have a clean break. We were observing this area as a resistance level that was holding previously at this point here. Already the market has broken towards the upper side, but it doesn't seem to have as much momentum. So this means that there is a likelihood that the market will eventually break in one direction. And of course, when I say one direction, it's not the artist. In this case, it's a direction that the market will take, which could present some nice trading opportunities. So in this case, observe for a potential break here. And once it happens, you'll know exactly what to do because it will give you a direction that the market will take, which will potentially give you a nice idea on whether to execute a buy or a sell trade based on the outcome of the news. So here we have a consolidation for the last 3 days, and that's about to get broken. So for majors, we already have a break happening in USD CAD, and this has been a common theme across the day. So dollar gaining against other currencies. We have seen the Euro USD breaking towards the upper side, but then the news hasn't happened yet, and we are yet in another consolidation zone. In this case, looking at the last high that we saw on Thursday last week. So before the news comes out, the market is trading around this area. So in this case, if we ignore the previous buyers here, a strong dollar would likely push the prices back to the weekly low. And of course, a weak dollar would basically lead to a good rally towards the upper trend line. And there's still more room for upside. So the upper trend line is all the way up. And we could be seeing the market retesting this area here. So for USDJPY, I believe this one is the most potent of all the pairs, mainly because fundamentals are clear that the yen is continuously losing to the dollar. And yesterday it was flirting with a 33-year high. The last time that the USDJPY traded slightly higher than this was back in the 1990. So in this case, speculators have been pushing this pair higher. And of course, an attempt by the Bank of Japan to support its currency yesterday was met with a very strong reversal, basically traders questioning the commitment of the Bank of Japan to support its currency. And you can see today has been trading sideways, awaiting the news. So this move happened very quickly. I think it was within the span of 2-3 minutes, and we had a big, sharp drop. So if I try and show you this, you wouldn't believe it until you see it. Yes. So this was yesterday. So market is trading here. Then a very sharp drop. So within, I would say 1, 2, 3, 4, 5, 6. So within 6 minutes, there was all this drop, and then the market recovered quickly. And then we haven't had much momentum since then. So this is the current price action. And as you can see, the spreads are already widening, indicating that more momentum is coming into these charts. So even from the 1 hour chart, you can see that the spread is quite wide for USDJPY as we approach the news announcement. And this could get even wider. So that's why we avoid trading during the announcement. We await the announcement and then process the outcome, because it's the outcome that will help us determine the difference between the reported versus expected numbers. And of course, it will also help us visualize the market reaction after the fact has already happened. So in this case, I expect some good volatility to be coming from this pair. And by good volatility, I mean a sharp drop or a clean break above 151.9. So 151.9 is just right here. And this was the highest price last year. So we are looking at the high of the year, and it was the high of last year. So if the market was to break here and move higher, then the likelihood would mean we cruise even higher than this and continue trading higher. So this could determine the direction of the USD yen currency pair. But then a drop would mean market panicking, and we could be seeing 150.769 happening. So remember, as we always say, the bulls will climb up the stairs, which means it's a slow gain over time. But then when it's the bears time, they jump off the window. So when the market is trading due to panic, it's not a small drop. It's just jumping off the window and very fast and violent drop in prices. So in this case, if there is a news supporting or suggesting a weaker dollar, then a very sharp drop by USDJPY to 150.769 could happen within minutes. So as for pound USD, it has also been quite resilient against the dollar. So for the week, we are seeing this positive momentum, but now you can see a key price level is 1.22948. So in this case, if price was to spike and move higher, then this is a previous high and this is a previous low. So I'll try and identify all the key and important price levels. So knowing that these are our price levels, of course, a strong rally in the pound would get us to 1.24272. And of course, if the pound will be weakening from the dollar, then this is a nice target at 1.22155. So as for the dollar index, you can see it's looking to retest this area here. So despite attempting to go up about 2 hours ago, you can see it's constantly losing to these other currencies. And now it's looking to retest a major trend line. And this is a neckline that we saw during this formation of the head and shoulder pattern. So in this case, I expect something akin to a very strong bounce or a very clean break. So the key market indicators will be the previous low versus the current support level. So a breach below this could see the dollar index retesting 104.655. And of course, if the dollar index makes a strong bounce, then a rally to 105.868 could suffice for the day. So I'm hoping that everyone is prepared for this now. So I'll be checking to see if there's any questions. Hello, Jimmy. I can see J Scott, John Moora, Peter Samuel, Marcus Lennox. Thank you, guys. What if it comes at 3.5%, not 3.3%? So 3.5% will be a drop. The previous number was 3.7%. It would mean that the direction is bearish. That is the natural trend of inflation in the US is continuously moving downwards. So after having 2 consecutive months where it was 3.7 and then 3.7 again, 3.5% would be a drop. It wouldn't be significant enough, but in terms of understanding it, I would say inflation is still coming down and the Fed would have a reason to pause rates again. So in that case, some weakness in the dollar, but overall maybe a recovery in the following week. So yes, 3.5% is consistent with the Fed. If they did not hike interest rates when interest rates were at when inflation rates were at 3.7%, if inflation drops 3.5%, then they will not hiking interest rates again. So remember, the goal is to get inflation back to 2% target. So if it's moving downwards from 3.7%, in that case, they'll probably say, let's wait and get more data. Another question, we have another CPI print before FOMC. Why should this CPI print be a block booster? This is like the most widely accepted CPI measure that is used in most government decisions. So while the Fed basically considers the PCE price index or personal consumption expenditures data as an indicator of inflation, this is the one that moves the markets the most. So statistically, if you've been observing the CPI versus the NFP versus the interest rate decision, the FOMC press conference, and all that data, the one that has had the biggest impact in the markets over the last 1 year, in fact, over the last 18 months, has been the CPI announcement. So that's why as traders, we are focused on this because it has the largest impact in the markets. We are prepared, Sensei. Thank you, Tony. Now you guys know how to position yourselves. I don't want you guys to be having split screens where you're trying to listen to me and I'm not adding any value. I believe we have covered the most valuable stuff. So get prepared, get ready. And as I always say, don't let these news announcements get you overexcited. Don't burn your account because you tried trading the CPI. Keep your risk appetite within limits. So if you normally risk $10, don't risk more than that. If your risk appetite is usually $100, don't go for above 100 because there's a big news announcement and you're getting greedy and expecting big spikes in the market. So maintaining that discipline and protecting your account is what keeps you in the game rather than going off your risk profile and getting wrecked in the process. So try and protect your account at all costs. Don't make funny mistakes. I only want to hear of success stories right after this has happened. What direction do we expect UT100 to go? I think we have already described this. There's no direction that we are giving today because we don't know the outcome of the news and we don't know the reaction in the market. So all I can offer you is an analysis that all you need to monitor is this flag and observe the direction that the market will take. And of course, as we all know, if the Fed is looking to tighten policy further, then in that case, it would be negative for equities. But then if inflation rate slows down as expected, and now you expect the Fed to hold interest rates, then equities are expected to be rocking towards the upper side, breaking into new ceilings. So in this case, we should be expecting some further upside from this one. And of course, the top of the pattern is the July high. So in this case, after seeing this breakout, a retest and a continuation, then the next target will remain at 15,939 for the NASDAQ or for the UT100. So thank you guys, and I will see you on the next session tomorrow. Tomorrow I will not be the one, it will be Norbert from Kampala. So make sure to attend, and of course, make sure to follow the channel, activate notifications so that whenever there is a new session, you get notified as always, and you get to benefit from these sessions. We appreciate you, RK. Thank you, Sunset. See you guys. See you then.